Cathie Wood has been buying Tesla non-stop in the last 2 weeks, and this is not very common behavior even for ARK, especially when you count how many times they've added in a row. Most of these have been for their flagship ETF ARK Innovation, and yesterday finally paid off when Tesla exploded 6 to 7% higher. Now Tesla is up 20% from the lows, and one has to wonder, why does Cathie Wood know that the rest of us don't? And why is she buying so aggressively all of a sudden? Today I want to cover the 3 main reasons why ARK is buying Tesla non-stop, and how these 3 pieces of information give Cathie Wood and ARK an edge over the rest of the market in terms of Tesla stock. Reason number 1, the cost curve. Cathie Wood specializes on adoption curves, and most adoption curves follow something called Wright's Law. Wright's Law is a mathematical model to predict cost declines as a function of cumulative production. In plain English, ARK uses this model to estimate demand for a new product when prices come down. In Tesla's case, the cost decline will be for electric vehicles. Now, what happened a couple days ago? Tesla dropped their prices in China by 14%, and people freaked out. I predicted that in this video right here, and if I could see it coming, Cathie Wood saw it coming for sure. And coincidentally, ARK Invest started buying more aggressively after that, because ARK understands that when Tesla cuts prices, Tesla makes more money. Common wisdom tells you that price drops are bad for the business because margins come down as well. But people don't understand the elasticity of demand for a new product such as electric vehicles. For every $1 Tesla drops prices, they make multiple dollars in profits due to selling more volume, because demand increases non-linearly as price drops. And this is true until you reach $25,000 price, in which you reach market saturation, at least in the US. In Europe, it's a little bit higher, in China, it's a little bit lower. And Cathie Wood's thesis for Tesla relies exactly on this. So when the rest of the market saw a negative event, Cathie Wood saw a positive catalyst and then doubled down after. And not just that, but she's taking it a step further. And now she's predicting a $25,000 model announcement sometime this year. Unlike most analysts and amateur investors, ARK understands Wright's Law and the demand elasticity of the car market. Now, the second reason ARK is piling on Tesla stock, and this might be more of a hidden gem, is the commercial fleet thesis. And this is not robo-taxis or FSD. This is Uber, Lyft, and limo businesses as well. Something happened in June last year that changed the economics of doing taxi in an electric vehicle. The IRS increased the mileage deduction rate to 62.5 cents per mile. Notice this number was not intended for use in electric vehicles. This number was calculated on 3 main factors that affect fleet operators today: maintenance, depreciation, and gas prices. Now, maintenance for an EV is half of what it would have been for an ICE vehicle. For a Tesla, it's even better than that. Also, pretty much Teslas don't depreciate, and the electricity costs 1/5 of what gas costs. So none of the 3 factors that the IRS used to calculate this new rate apply to Teslas all that much. This means that any profits made in a commercial service are pretty much tax-free if you can take advantage of this new tax deduction. Cathie recently started understanding this, and this information added to her conviction in Tesla, because even if demand from the consumer side suffers, the use for commercial fleet operators such as Hertz is so big that any excess production will be bought regardless. And this provides a cushion of demand that didn't exist for Tesla before. And it's not well understood by fund managers just yet, and much less by the Tesla retail community. Cathie's team is very fast doing research, and she'll have all this information edges that many other funds will miss. Now, there's the third reason that ARK has been adding more aggressively, and this is the change in strategy for Tesla in 2023. Luckily for us, I already broke this in another video. If you want to understand this change of strategy that both Elon and Cathie are betting on, you probably want to watch this video over here. It's one of my best received videos I've ever made for sure. In any case, thank you very much for watching, and see you next time.